Welcome back to Money Talks week 12. So we have spent now 3 months together. That is pretty impressive in itself. So I hope you're learning lots and we'll continue joining the podcast weekly and learning even more. So today we're going to move beyond last week's discussion on REITs and get more into physical real estate, particularly residential real estate such as houses and condos. First thing to note, this is not my area of expertise, so I do post a bunch of extra resources to look into on my blog if you're truly interested in learning more and doing physical real estate. So your primary residence, the place you live currently, is not necessarily an investment, and I don't think personally you should view it as such. What I'm talking about when I say investing in real estate, residential real estate, is building or fixing up or buying new and renting out a second property in addition to the place you live. First, unlike stocks, funds, and REITs, you need a lot of startup capital. Basically, tons of cash on hand to get started in real estate usually. Down payments, which is a percentage of the total property price that you will need upfront, is usually 20%. In some places, you can get away with less. The city I live in, Toronto, the average detached house price is a cool $1 million Canadian dollars. That means the down payment would be a whooping $200,000. That's a lot of cash. Then you need to worry about qualifying for a mortgage loan through a bank or an alternative lender. These lenders usually look at your income, credit history, and debt when determining if you qualify and how much you can qualify for. You should play around with the mortgage calculator online to get an idea of how much monthly payments on the property and whether it makes sense given the rent you'll be getting from that property and any potential rise in the value of the property in future years. These are usually very mortgages. I'm talking about very long-term loans with 25-year terms usually, sometimes 30, sometimes less if you can pay them off earlier. But you will be paying a lot of interest to the bank or the lender. So something to think about is that obviously you need a lot of money on hand, but real estate investing can at the same time be attractive and quite lucrative. Now, why is that? Well, one main reason is leverage. I have attached a nice short video about what leverage is on my blog. But the idea behind leverage is getting a big return on a small amount of investment money by borrowing the rest. Basically, putting money down and financing the rest through a bank mortgage means your returns on your investment capital, the down payment, in the case of the house prices does rise, will be an outsized percentage. Similarly, leverage is a double-edged sword. If the house prices goes down, you lose as a percentage. Your losses are also outsized. Or, if you really know what you're doing, you can build up a property from scratch or renovate and rent or sell beaten down properties for many times the return on your investments. You should be aware that real estate markets can be very regional, one town onto the next. As you have probably heard before, location matters. Moreover, property type matters. Condo townhouses are different from freehold townhouses, and semi-detached houses are different from detached houses. Then there are the bigger properties, which could be good investments such as duplexes and triplexes. Their value and investment attractiveness, depending on property type and local market conditions, will be different. Generally, just as stocks and REITs and funds can give you a dividend, real estate investment will give you rents to make your money back and more. I have attached a resource on how to calculate rental yield and net income for an investment property that you can look into. It is important also to work out all the numbers before putting in large sums of money on a down payment and committing to a mortgage, and of course taking care of tenants and the property and all the work that will come after. But if you think you're great hands-on and would make a good landlord and have spent the effort and time learning about real estate, there are many great internet and app resources to keep track of properties selling and buying in your region. Canadians can use the House Sigma app or check out the REMAX website, all of which are linked on my blog in the description. There are many more, but these will be enough for you to start off. So definitely keep the idea of a second residential property as an investment and a way to diversify your investment portfolio along with the different assets we have talked about in previous weeks. It is an idea that you want to entertain. That's it for now. Come join me next week. Cheers.